Hello, what's up, everybody? It's another time we meet again here at cadjpy with myself. I'm so super glad to take you through this pair. It's CAD yen. It's a pair which I've been quietly waiting for this entry for more than 10 days. Since the first day when I did analysis of this pair, which was on the 2nd June last month. And today is the 2nd of July, so you can even just see from the calendar how many days I've been able to patiently wait for this setup. It was Monday 22nd when this analysis was done in the first place, and how patiently been waiting. But as I normally say, in these financial markets, the only power that we have is when to enter, where to enter, and eventually where to close when we are running in profit. And that's one of the very difficult parts, to have that resilient and patience to wait. Of course, it has a lot of factors, psychology and so forth. But in order to leverage it, that we have no choice rather than be and remain patient with the setup that we have. Understanding market structure is one thing you can learn, can understand, and finish the course. Mastering it is another thing, but psychology, especially patience, is what makes more profiting in this trade. So like quietly we see here from the Monday of 22nd, was in 7:20 p.m. East African hours when I was first doing this analysis and placed my pending order. All right, and this is a daily time frame. I did this analysis quietly from 3 months time frame, making a correlation with monthly, weekly, and eventually through daily time frame. I was able to spot the area to enter this trade and capitalize from it. So let's go to see how this setup went through. Of course, it requires a number of couple of days to wait, and eventually today we have hit TP. Today is Thursday. This entry was triggered on Tuesday this week at daily time frame MDL liquidity, which was found within weekly time frame area of interest, daily time frame HOS liquidity. It was a 62% discount Fibonacci level, and the TP was at a daily time frame level with 130 pips, right? This is very perfect to trade because it encounters all of the confluences that matters when we do analysis, like a time frame alignment. You see the trend, you see the potential area of interest, which is price floor and price ceiling zone. What is the sort of liquidity located in that price floor and price ceiling zone? They are all add up and sum up to where we can do the potential to this trade. It's a sniper entry, but I'm not motivated by snipe. I'm motivated by not being stopped out and get out of the market at the perfect zone without facing a huge, humongous retracement. All right. So the analysis of CAD yen actually started from 3 months time frame. Here is where all the analysis started. Like literally, I look at the major structure from 3 months time frame. We are having a major bullish structure, right? This market is maintaining higher highs and higher lows, though we have had another a retracement here, but what we anticipated is that price would give us a new higher high. But look at what happened at this monthly 3 months time frame. Price ceiling zone. You see, whenever we have had contact with this zone for for the past 2 quarters, the first and second quarter of 2026, we faced with humongous WLL liquidities rejections, which were taking place at this zone, okay? And when we observe at the last 2 candles of the past 2 quarters, they are all indecision candle doji. We have had a humongous Marubosa bullish followed with 2 dojis. So this indicates that buyers' power has been exhausted, because if they are powerful, will eventually close above. So at this stage, because this is a potential price ceiling zone, and we have these indecision candles, now we start to look at it like buyers' power now is in exhaustion, and now we are going to look at more sells. All right. So we have a confluence here, 3 months. We see prices rejecting 3 months PFC zone. The last 2 quarters candles were doji, which means buyers have been exhausted, right? So I'm no longer looking for buys. Nevertheless, I'm not looking for sells until I have time frame correlation and confluence that tells me that we are going to the downside. All right. Now coming to the monthly time frame here with the observation. We look at the minor structure which was taking place. We have higher high, higher low, higher high. We have failed to create a new higher high. Instead, what we are facing the same rejections candles which were happening through 3 months time frame. We see them happening again in monthly time frame by the combination of what we have inverted pin bar here, and this which month was it? March this year, and April gave us an inverted hammer. These all candles are the sign of reversal. So you really need to understand how to read the candlesticks and translate them with respect to what's happening in the market structure. This is very crucial. This is very much important. So monthly time frame is now moving in sync with 3 months time frame in terms of candles, candle rejection. This is a quiet subject matter that for those who do not understand how to read the candles, here are my contacts. You could contact any class trade, just get that training in order to understand the behavior and the information that candles are giving us and how to interpret them. And mind you, we only lie the candles of the higher time frame. We don't necessarily concentrate with the same candles when they are appearing in the lower time frame, right? So now at least we have 2 time frames giving us some indication of reversal through these higher time frames. All right. Then now we have had a weekly time frame. Here is where the business closed. Here's where the business closed. I had some few observations here, like literally we see we have the equal highs which were formed at the 3 months price ceiling zone. All right. And then we have had a neckline of this equal highs. This neckline was broken following this very structure, lower low, lower high. We had a lower low. So that's why I had to wait for this past week, because it took about 2 weeks for the price to come and retest at the neckline of the weekly time frame equal highs, which were also generated at the area where we have had the weekly time frame price floor and the price ceiling zone, PFC zone, right? So now we are at least having 3 major higher time frames moving in sync. 3 months is bearish in terms of candlestick. Monthly time frame is bearish in terms of candlestick. Weekly time frame is bearish in terms of structure, in terms of equal highs. Also BNR, which is happening through the weekly time frame here. So now we're perfect bearish, and I concluded that we are bearish, as we see from the 22nd of June last month. That's where I was looking for BNR. We already have a B waiting for R retesting, then continue with the downtrend. All right. Now then I moved to the daily time frame. Here is where the business closed. Yep, simple like that. Now, what is the structure coming from the equal highs of the weekly time frame? You have a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Perfect. We have an MDL liquidity here. If you don't know what is an MDL liquidity is one of the key liquidities that I'm using to get into the trade, and also I'm using to get out of the trade. You know, zone to zone strategy, we are having about 8 to 10 liquidities which are constantly we are using to get them into the trade, and we are using the same from the higher time frame to get out of the trade. Okay, as I normally say, trading is like flying an aeroplane. A pilot wouldn't take a flight if he or she doesn't know where he's going to land. All right, so like a captain in the ship, you must know where the harbor is before you start your journey. I hope that through this daily time frame here, you'll see we are having another daily time frame PFC zone here. Then I will quit from there. By then, remember, during the day on 22nd, price was here, right? Retracement already started to take place. Okay, so measuring my fib, I took my Fibonacci, perhaps even see it very closely. We were here. Here's where the price was. So taking a retracement of the Fibonacci, we were getting that this MDL liquidity at the weekly time frame area of interest at the neckline of the weekly time frame eco highs. It was giving us a 62% discount of Fibonacci level. So everything was intact and making sense. Like the only thing that remained there was the level of patience to wait until Tuesday this week, where this entry was triggered, followed by Wednesday. Looking at Tuesday and Wednesday candle, we have had a very clear bearish harami, so that gave me a very good confirmation. Like now, real sellers are very serious. Looking at the candle of Tuesday and Wednesday, it gives us a bearish harami, so it was a good confluence to tell us that now, okay, fine, sellers are taking place. Like you see, today, this is the candle of today. Pain price is going there. For the case of stop loss, cadjpy is one of the pairs which has a low PMV, peak to mal value. Though I took it from the day time frame, but I just used the 30 pips for risky to reward ratio, which is 1 to 4, which is a good business, right? Which is a good business. So we could perhaps see, since we placed our pending order on 22nd, just waiting, but this 130 pips is something very good, very humongous good. And I see the weekly candle, how it's going to be formulated. I'll see tomorrow on Friday when this candle closes. If it closes like the shape which is giving us now is likely to be a inverted hammer, that will be so good. We look for another opportunity for sellers continuation perhaps next week, because you see TP1 is here, not yet hit. Perhaps maybe it might hit, but I'm not interested. And TP2 is here about 200 pips, but I just close. I've been waiting for this pair for more than 10 days, so I think for now it's be very much wise to check what the market has given. So it is what it is, and this is that was effects. The pair is cadjpy on the 2nd of July 2026, 130 bits with bearish continuation trend from the mid-range time frame and the higher time frame reversal. See you next time.